Good morning, Dunkin' Donuts, and here I am, Kenny Paul Curry, your host of the party, and today is April 5th, 2022, and it is going to be another very interesting day. So what is it that we need to know? The Eco Daddy yesterday was weak, but guess what? That was expected, so no surprise there. But the surprise was Lonnie Musk ignited a fire across the technology sector, sending the NASDAQ up 2% after he made the announcement of his investment in Twitter. JP Morgan warns of a massive losses out of the Russian crisis. The question is, who's next? Goldman, Citibank, Morgan Stanley. And oil, which has been under pressure, rallied 4% yesterday, and it's higher again today. And what are we having for dinner? We're going to have the Chicken Scampi. It's like the shrimp scampi, but it's chicken. Delicious. Okay, so factory orders were weak, coming in down 0.5%. Durable goods is also falling 2.1%. Lonnie Musk announces that he now owns 9.2% stake, 73.5 million shares with a market value of nearly $3 billion in Twitter, which set that stock up 27% on the news, making him the largest shareholder. Howard Schultz cancels the stock buyback in Starbucks, causing that stock to fall 3% on the news as he plows more money into his people and his stores as threats of unionization really begin to ring true. And JP Morgan warns of billion-dollar losses ahead of the earnings in Russia as the chaos continues, leaving investors to wonder who's next. The bond market remains upside down with the 2s, 5s, 10s, and 30s all mixed up. The 2-year yielding 2.41%, the 10-year at 2.39%, the 5s are 2.57%, and the 30s are 2.47%. But again, no one's paying attention at all to what the inversion means, even as the media hammers it home, because the 10s and the 30s are not yet inverted. Right? So it's convenient how the comparison changes depending on the message you are trying to send. Find the pair that's not inverted and then focus on that one to try to redirect the conversation. In the end, investors, traders, and algos took stocks higher yet again, even as it became clear that the next 3 moves by the Fed is up 50 basis points each, taking us to 1% before Memorial Day and 2% before the Labor Day weekend. Oil, which fell last week from $114 a barrel to $99.5 after the U.S. and the International Energy Agency announced the release of untold barrels of oil to help ease the supply shortage being created by the Russian-Ukrainian war. That oil yesterday advanced by 4.5% to end the day at $103 a barrel, again suggesting that the decline in prices was just a flash in the pan, a reaction to what was nothing more than a public relations stunt. Because demand for oil is strong and prices are going higher. And while the temporary increase in supply is good, it is only a Band-Aid for a much bigger problem. Remember, Goldman has a $130 price tag on it by year end, while RBC tells us don't be surprised to see $200 a barrel, which is surely, I'm sure, going to be surprised before spring turns to summer and the driving season begins. And for those that don't think there's going to be a driving season, think again. Go online and try to find an Airbnb anywhere from the coastline, from Maine to Kiowa, during those summer months. And if you find one, first of all, expect to pay up for the stay. And all that suggests is that people are planning on going on vacation. They need to get out. They want to breathe. They're going to drive their cars to get there. And that means they're going to fill up their tanks. And they got to fill them up to go, and they got to fill them up to go home. The chatter all day is, what is it that Lonnie Musk really wants with Twitter? What are his plans? Is he really just a passive investor, or is he going to start to tighten the screws on the cancel culture as he publicly questions Twitter's commitment to free speech? Will he become an activist investor that's going to force change at one of the most popular social media sites, or will he just sit back and watch? Now, the smart money says, watch out. Lonnie is not the shy and retiring type. He is not going to spend billions of dollars to buy a 9.2% stake in a company and then sit there then sit there and do nothing. You better believe he has something up his sleeve. And what is now being discussed as his intention hidden in plain sight was his March 25th tweet. In this tweet, he asked a question and took a poll. And the question was, free speech is essential to a functioning democracy. Do you believe Twitter rigorously adheres to this principle? He then went on to say The consequences of this poll will be important. Please vote carefully. Well, you know what? 70.4% of respondents voted no. In the end, look, it's a very slippery slope. Who gets to decide what free speech is? How is it monitored? What content is considered okay versus what is offensive? It's a very, very tangled web we weave, yet it is a web that we have woven. And to top that off, news that Tesla is going to now deliver a record number of cars, even in the face of the supply shortage, sent that stock surging higher as well, up 5.6%, to end the day at $1,145 a share. He has managed a supply issue perfectly, at least for now, and that only makes him much more of an enigma because the competitor is apparently unable to manage that issue. By the end of the day, investors took the Dow up 105 points or 0.3%. The S&P up 36 points, 0.8%. The Nasdaq up 270 or 1.9%. The Russell up 5 points, while the transports had another down day, losing just 10 points or less than 0.1%. And as you can imagine, it was the beaten up sectors that were the winners yesterday. Tech up 2%. Leaving that sector down 7% on the year. Consumer discretionary rose by 2.25%, but it is still down 7% on the year. Communications up 2.7%. It is still down 8.5% on the year. Retail, another sector, has got absolutely clobbered, rose by 2.6%, but it is still down 14% on the year. Housing down 24% year to date, also found buyers rising 1% on the day. And guess who else had a good day? Kathy Woods and her ARC Innovation Technology Fund. It rose by 4.3%, leaving that fund down 25% year to date. So do you see this pattern? All of the money went into the most beaten up sectors as Lonnie Musk lit the fuse and created all kinds of excitement for traders. No matter that the yield curve remains inverted and the Fed's about to get very aggressive. But don't think that this is long-term money just yet. It's trading money. When the mood turns sour, these will also be the sectors that take it on the chin. The sectors that lost yesterday did not get slammed at all, the ones that were underwater, which tells you that the long-term money is still sitting tight. It's not reacting to the excitement created by Lonnie. They didn't fall significantly. They were just off a little bit, 0.5%, not a big deal. U.S. futures were lower overnight, but have once turned higher by 4 o'clock this morning, but now have once again turned lower, right, as the sun comes up. The Dow, the S&P, the Nasdaq, and the Russell are all off this morning as we go into the opening bell. In addition, the yield curve inversion, the geopolitical crisis continues to weigh on the markets, and the fighting continues and shows no signs of abating. Ukraine warning of more atrocities across the country, while the West declares Putin a war criminal, which at this point only serves to embolden him. I mean, is he really running scared because someone told him he's a war criminal? Most likely not. The bond market continues to send conflicting signals, while the VIX, the fear index, is suggesting calmer waters after falling 50% in the month of March, leaving it below all three trend lines, trading at levels last seen before the war started. Economic data today includes the S&P U.S. Services PMI of 58.9 and the ISM Services PMI of 58.5. Now remember, the U.S. economy is 75% service economy, so these reports are very important. A weakening services number is not good. Remember, 50 is a neutral line, so anything north of 50 is expansionary. So 58.9 and 58.5 is certainly in expansionary territory, so you have nothing to worry about. Sit tight and let us just see. A weaker than expected number, though, will play into that slowing economy narrative, right? European markets are being described as tepid this morning. At 10 a.m. European time, they were kind of just trading around the flat line as they monitor the crisis in Eastern Europe and consider additional sanctions on Moscow. European bonds also continue to come under pressure, sending yields up amid worries about inflation and what the ECB response will be. Right? This morning at 10 o'clock European time, 4 a.m. our time, markets across the region were trading anywhere between down 0.25% to up 0.5%. Bitcoin this morning is still trading at 46,000. Ethereum's at 3,500. No real movement in either one of those cryptos. The S&P closed last night at 4582, up 36 points, We're now comfortably above the trend line of 45.40, and we're going to look to challenge the March 29th high of 46.05 today. The near-term trading range is now 45.40, 46.05, but the broader 44.20, 4800. Now, the short-term trend line that created the death cross 2 weeks ago is starting to turn up, and when it crosses up and through the long-term line, it's considered a golden cross and suggests better days ahead. If we continue to trade up here on the S&P, the golden cross is going to happen in the next 2 weeks, just after tax time and right before the Fed announcement. Tomorrow's FOMC minutes will reveal, or should reveal, the Fed's intention, the pace of tightening, and the pace of any balance sheet reduction. Over the next 2 months, the market has a lot of information that needs to be priced in. And the bias is higher yields and inverted curves. And all that means is speed bumps ahead. The question now is, can the Fed engineer a soft landing? Because if they can convince the markets that they can, then expect that stocks will continue to push higher. But if it looks like we're about to crash land, then watch out. But I also suppose the Fed can always change course if they have to, and they can slash rates again and try to cushion the blow, creating that soft landing. But look, in any event, stay the course, assess your risk, assess where you are in the life cycle, and then invest appropriately. Talk to your advisor if you have any questions. Give me a call. I'm always happy to discuss. Okay, so what are we having for dinner tonight? This is just a twist on shrimp scampi, and it's chicken scampi, right? You make it essentially the same way, except we're going to use diced up chicken, bite-sized pieces of chicken, right? It's easy to make. You can serve this over linguine, or you can just eat it with a large mixed salad, right? It's a perfect alternative to the more traditional shrimp scampi, and especially if anyone out there doesn't like shrimp or can't eat shrimp for whatever reason. Okay, so for this you need 1.5 pounds of skinless, boneless chicken cutlets cut into bite-sized pieces. Salt and pepper, dried oregano, butter, olive oil, thinly sliced garlic. You need flour, dry white wine, red pepper flakes are optional. You need a tablespoon of freshly squeezed lemon juice, finely chopped parsley leaves, a quarter a teaspoon of grated lemon zest, and a pound of linguine if you choose to use the pasta. And you always need grated Parmigiano Romano cheese. Either one works fine on this dish. Now, if you're going to use the pasta, you're going to bring a pot of salted water to a rolling boil on the back burner and leave it there getting ready so you know the drill, right? We always do that. Now you want to rinse and pat the chicken dry, season it with salt and pepper and dried oregano, toss it in flour, and then set it aside, right? You want to just dredge it in flour, shake some of the excess flour off. In a large non-stick skillet, you want to add the butter, a splash of olive oil, and the garlic. Saute it around for a couple of minutes. Let it get nice and toasty brown. Now raise the heat to high, and you want to add the chicken pieces. You want to cook the chicken for 8 to 10 minutes, and when it's cooked, you want to remove it from the pan and set it aside. Now, at this point, if you're going to use the pasta, you want to add the pasta to the pot, cook it for about 8 minutes, right? Nice and al dente. Next, you go back to the skillet, you want to add the white wine and the lemon juice. Bring it to a boil, then turn it down to simmer and let it kind of reduce. Here is where you're going to add the red pepper if you're using it. Put it in now. It should begin to thicken a little bit as it reduces, no more than, say, 4 minutes or so. Now you're going to add in 1 more tablespoon of butter, let it melt, add in the lemon zest and the parsley. You want to scrape the bottom of the pan to get any bits off the bottom. Turn the heat off, and now add back the chicken. Stir the chicken to coat it well. At this point, the linguine's done. You want to add the linguine right to the skillet, mix it all up. If you're always saving a little bit of the pasta water, because if the pasta sucks up the juice, you want to add a little bit more water. You know the drill. I tell you this every time I make a pasta dish. And in the end, this is a great dish to also have garlic bread. So if you're looking for a side, something different from salad, don't forget the toasty garlic bread. And you can enjoy this with your favorite red or white wine. Either one works with this. I would use a lighter red wine if you're gonna drink red, like a Chianti or Pinot Noir versus something really heavy. But in any event, it's your dish, it's your wine, it's your taste buds. You do as you please. It's a beautiful day out. Until tomorrow, take good care.